Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. The economic survey lowers its growth forecast for the current and next financial years, also seeks lower subsidy bill to fund higher spending in areas of growth. Indian markets make up for some lost ground but remain in the red as oil and gas stocks weigh on the index. SBI reports good set of numbers in the third quarter. Profit rises 41% on back of healthy recoveries while asset quality also improves. And Hindustan Unilever and IDC are the two other index heavyweight coming out with their numbers today. Good afternoon, Neeraj. We're in the red, but significantly off today's low, so some good sign ahead of the budget.
Thanks, Navneet. Thank Kotak Bank. Thanks some of the others. But yeah, Navneet just summed it up, almost everything in the headlines. Little left to talk. We'll have the CA addressing the media very shortly, so we'll cut to that as well. But keep in mind, this is the Nifty 50, very flat in the session today. Okay, let's cut across to the Chief Economic Advisor talking.
Is reflected in the economic survey. I'd also like to thank the Secretary Economic, which is reflected in the economic survey. I'd also like to thank the Secretary Economic Affairs and other secretaries for their inputs in the economic survey. I'd like to certainly place on record all my advisors who have worked very hard to prepare the economic survey and the team of the economic division who have worked extremely hard with unparalleled commitment to produce the second economic survey within a space of 6 months. My thanks goes to all the academics and the practitioners who also contributed to the survey. And last but not the least, we would like to, with all our deep gratitude, thank all those who actually gave us appreciative words and feedback on the previous version of the economic survey, which we've tried to incorporate to work even harder for this one. The theme for this year's economic survey is wealth creation. On the 15th of August, the Honorable Prime Minister spoke about wealth creation and mentioned that wealth creators need to be respected because wealth cannot be distributed unless it is created. The Honorable Finance Minister also insists that those who create wealth are indeed India's wealth. Inspired by these ideas, this year's economic survey, the theme is wealth creation. The cover of the economic survey, which is lavender, captures the 100 rupee new note, which is in this color, and combines the old with the new. The rupee symbol also captures the same theme about wealth. You have, so that is indeed the color as Sanjeev is showing, the Principal Economic Advisor. The economic survey, as I will explain in detail, is a synthesis of the ideas of old and new. As I just mentioned, the lavender color captures basically the new 100 rupee note together with the old note, which has been around for very long. And in terms of the ideas, the economic survey combines contemporary evidence that I'll share with ancient ideas. And therefore, it's a synthesis of the old and the new. But before I actually get into describing in detail the ideas in the survey, let me spend some time talking about the current economic scenario. There has been a slowdown in the Indian economy. Part of it is because of the global economy itself slowing down. You see here the world, the advanced economies, the emerging economies, and all groups of countries have actually slowed down in 2019 when compared to the averages for 2014 to 2018. In a globalized economy, India has also felt that effect. But there is one important aspect on which I will delve into greater detail, which needs attention from the perspective of the Indian economy, which is the financial sector. This chart shows the share of corporate loans in non-fruit credit starting from 2007 to 2019. What is quite relevant here to notice is this boom and bust, with 2013 being the peak when the share of corporate loans reached their peak. After that, it has decreased. Now, what is the impact of this on investment? If you want to understand the impact of this on investment, we can do the following exercise, which is take a 10-year period, split it into 2 5-year halves, look at the credit that a firm takes in the first 5 years, and then correlate it with the investment that the firm does in the next half. Now, if suppose the credit that they've taken actually is affecting investment negatively in the next 5-year period, then you should see a negative correlation with 2013 as being the break year. And that is the exercise that is being shown in the table. This is the result from regressions that we've run. What you see clearly is that it is indeed 2013 and the 10-year period from 2008 to 2017 where there is this negative correlation. In other words, firms that actually borrowed a lot more from 2008 to 2012 were indeed the firms that they also actually invested less from 2013 to 2017. Now, how does this affect GDP growth? As we had showed in the last economic survey on the virtuous cycle, the virtuous cycle originates from private investment, which affects economic growth with a lag, and thereby consumption, and that's how the virtuous cycle proceeds. Now, what is important here is what is being shown on the right, which is the correlation of investment with GDP growth, with both contemporaneously and with lags. I want you to pay particular attention to the one that is being shown with the arrow, which is the correlation with a 4-year lag. Which is, what is the impact on GDP growth this year due to the investment done 4 years back? That has a very strong positive correlation. If you look at the contemporaneous correlation, which is being shown in black, that is negative. Now, this is important for us to understand because as I just showed, the peak of the credit happened in 2013, and after that, there has been actually a decline in credit, which has affected investment as well, and it's that 4-year lag as a result of which the slowdown in investment has led to the growth slide, starting from 2017 onwards. Now, it is in this context that we actually focus in this year's economic survey on the theme of wealth creation. Wealth is both a cause and an effect of investment, especially private investment. Therefore, it is important for us to focus on wealth creation. In this context, it is quite pertinent to go back and look at the history, the recorded economic history. This chart shows that for close to 3/4 of recorded economic history, India has been the dominant economic power in the world. So this chart goes from 180 to 2017. Obviously, the first 1,000 years are actually not up to scale. 2000 is being shown in a smaller period on the x-axis. But what is critical here is that for 3/4 of recorded economic history, India has been the dominant economic power. Such dominance does not happen by mere chance. Such dominance happens by design. And what is that element of design? It is indeed our emphasis on wealth. If you think about what our traditions say for the 4 noble human pursuits, which is dharma, arth, kam, moksha, arth is indeed about wealth. The canonical example, the canonical literature that is talked about is Arthashastra, but even many of our other ancient traditions also advocate wealth as wealth and wealth creation as indeed a noble pursuit. A very important piece of Tamil literature, which is the Tirukkural, talks about this in the chapter 76. Wealth, the lamp unfailing, speeds to every land, dispensing darkness at its Lord's command. Now, that is ancient thought, but how does that correlate with evidence that we have in recent times? To provide contemporary evidence on this, the exercise that we've done is to look at the top 100 entrepreneurs as measured using the Forbes list as of 2019, looked at the wealth that they've created over the last 10 years, applied necessary filters to ensure that the wealth was created in the right way, and correlated it with various other aspects of society. In this chart, what you see is that as there is an increase in the wealth created by our entrepreneurs, the largest entrepreneurs, the employees actually benefit as well from the salaries and the jobs that they get. A second dimension is those firms that supply to the firms of these entrepreneurs. And here, what is being shown is that the wealth created by these entrepreneurs benefits the suppliers as well because they end up supplying to these firms. A third way of looking at it is the foreign exchange revenue, which you all would understand matters for macro stability because those revenues affect our current account deficit and in turn macro stability. What you see here is that the wealth created by these entrepreneurs also correlates strongly with foreign exchange revenues. A final aspect is what goes to the citizen through the government as the taxes that are paid by these entrepreneurs. What is being shown here is the direct taxes paid by these entrepreneurs, which clearly is an underestimate because there are various other indirect taxes that are also paid. But what is important here is a strong correlation between the wealth created by these entrepreneurs and the direct taxes that are paid. Because, and this goes back to what the Honorable Prime Minister said in his Independence Day speech, unless wealth is created, it cannot be distributed. And for distribution, it's basically taxes that are the primary instrument. Now, as I had mentioned, that India dominated economic activity for 3/4 of known economic history, and that doesn't happen by accident. It requires design. So what is that element of the design that indeed led to such economic dominance? The economic survey posits that it is the combination of the invisible hand of the market supported by the hand of trust, which is what leads to wealth creation. And here, there are important pieces of literature which we actually quote from. Take, for instance, to support the idea of the invisible hand of the market from Arthashastra, which says the root of wealth is economic activity, and lack of it brings material distress. In the absence of fruitful economic activity, both current prosperity and future growth are in danger of destruction. In fact, the Arthashastra also commends the king to actually remove all obstacles to economic activity, which you would think about in contemporary times as economic freedom. If you look at the hand of trust, in the same chapter from which I quoted from the Tirukkural, Tiruvalluvar says, wealth yields righteousness and joy, the wealth acquired capably without causing any harm, which is about the hand of trust. So now I'm going to provide evidence on these aspects. Before that, let me just mention that the economic survey, building on this idea that the combination of the invisible hand of the market has to be combined with the hand of trust, introduces this idea that trust is a public good which gets enhanced with greater use. Consider the example of water as a public good. As we use it more, it gets depleted. But the beauty about trust is that the more it gets used, the more the value of it gets enhanced. Of course, conversely, it's also true that if it does not get used, then the value of it declines as well. That's the characteristic of a public good, which gets enhanced with greater use. In trying to pursue wealth creation in the Indian economy, the economic survey brings out 10 main ideas, which is first that wealth creation benefits all. The invisible hand of the market enables wealth creation. Trust is a public good that increases with use. Grassroots entrepreneurs, which we basically have evidence in the second chapter of the survey, using evidence from 504 districts in India, showing that grassroots entrepreneurs indeed create wealth in their districts. Pro-business policies, those that provide equal opportunity, are important for wealth creation. In order for wealth creation, it's also important to remove some of the anachronistic government interventions that have actually subsisted. Job creation, which is very important in the Indian context today, can be furthered significantly by integrating Assemble in India for the World into the Make in India campaign. The survey goes into great detail about how the ease of doing business can be enhanced by implementing specific suggestions to bring India within the first 50 in the rankings in the World Bank's ease of doing business rankings. The survey highlights that the banking sector, when you compare the size of the economy, is at this point subscale, and that is something that we need to think about. Finally, in keeping with the spirit of making economics relate to the common person, the economic survey brings the idea of thalinomics, which is the economics of a plate of food in India. Let me give you some evidence about the role of the invisible hand of the market in generating wealth. Of course, India's GDP and GDP per capita have increased significantly after liberalization. In this chart, what is being shown is the wealth that is created from the perspective of the stock market. What is quite interesting to note here, what is being plotted is every milestone that the Sensex achieved, 5,000 milestone. If you notice the first half, which is the phase 1 accelerated growth, while it took about 170 months for the first milestone of 5,000 to be reached, the subsequent milestones were reached much, much faster. And that's the first phase of accelerated growth. By the way, this is not just because of a scale effect. It is the increase in the growth rates that actually accounts for this acceleration. A second phase from 2007 to 2014, when it took about 80 months for the next milestone to be achieved. And then a third phase of revival again, where the milestones are being reached faster. Also notice that the last milestone from 35,000 to 40,000 has taken a little longer, which is actually also reflective of the slowdown in growth that we talked about. A few other examples, if you look at it from various sectors, this shows the banking sector. When the entry of private sector banks was allowed in the early 90s, look at the growth rate in the penetration of credit before and the penetration after. It's significantly higher. Similarly, another example, take the mutual fund sector, which when it was opened up in early 2000s by breaking up UTI, look at the growth rates before and after. Again, significant difference. Another way of looking at the same thing, the impact of economic freedom and openness on generating wealth, is to distinguish various sectors. Here, an apples-to-apples comparison is being made within the transport sector. Take an open sector like roads and contrast it with a closed sector like railways. And here what is being shown is the freight traffic. The freight traffic for the open sector increased at exponential rates, much higher than the closed sector, and this effect is even more pronounced when you look at it from the perspective of passenger traffic, where you again find the open sector increasing at much higher rate than the closed sector. So in sum, these and other evidences that are there in the first chapter clearly articulate that the invisible hand of the market really and openness enables actually growth, not only at the aggregate level, but also at the sectoral level. The other important pillar, as I just mentioned, is the hand of trust. If you look at the Transparency International's Corruption Perception Index, 2011 is when India actually was at its low. If you correlate that with a different way of looking at the same thing, which is there is a break here provided in 2011 when the report on the 2G spectrum allocation was brought out. If you look at it, what is clear here is that connected companies, which are basically which is the line that is shown in red, vis-a-vis those that actually, the purple line for the BSE Sensex, before 2011, the connected companies actually earned much higher returns. But then there is a scissor-like movement after 2011 with the same connected companies earning lower returns since then. This is an important aspect because it relates to trust in the system and the difference between the pro-business policies that enable opportunity versus pro-crony policies that can favor incumbents, which is the chapter 3 of the economic survey. Another way of showing the same thing is the quality of financial statements. The Reserve Bank of India pointed out some of the large defaulters. What this chart shows is the financial statement quality of these large defaulters, 11 of them, by comparing it with the median financial statement quality in 3 years, 2012, 2013, and 2014, the median level, which captures basically what is the level of financial statement quality for the average firm, vis-a-vis that for these 11 large defaulters. And what is very clear is that even in 2012 to 2014, these indicators of financial statement quality were giving some signs. And it is important in the context of trust to actually keep in mind that when there are large firms whose financial statements are not as dependable, then it creates a trust deficit for other firms as well, because the average investor then starts thinking about the financial statement quality of every firm. A different way of looking at the same thing is by looking at the wealth erosion by willful defaulters, which is being compared with some of the large subsidy heads in the budget. One way of saying this is that if this money were not lost, we could have been spending almost double on our social sector, which benefits the common person. For instance, if you look at the health, education, and social protection, the spending that is done is almost the same as that for willful defaulters. Or if this money possibly had been spent on improving the capital, if this hadn't been lost, it could have possibly been spent on capital expenditures in the railways, which again benefits the common person by enabling that person better travel. I was actually talking about telltale signs, for willful defaulters. Here, what is being done is a comparison between willful defaulters versus non-defaulters in the top panel, and willful defaulters versus distressed defaulters in the bottom panel. And here, if you look at in terms of the disclosure of related party transactions, the promoter holding that is pledged, or the loans that are given to related parties, clearly willful defaulters differ significantly from either non-defaulters or distressed defaulters. And these are signs that actually, again, important, which I'll come back to later. One other way of looking at this is the way, take one particular bank that has actually declared a particular borrower as a defaulter, and does another bank reflect the same? This, if you see, from 2014 onwards till 2019, this has secularly increased, which is consistent with the cleanup of the banking system that has happened over the last 5 years. Now let me spend some time on the important instruments for wealth creation that we must rely on. This chart here shows the widespread new firm creation that is happening at the level of districts in India. Think about the movie Band Baja Barat, where this protagonist, Shruti Kakkad, actually says that, "Main India ki best wedding planner banungi." It looks like from this map, clearly, that there are many, many Shrutis like that all over the districts in India. In fact, those people in the south would also be able to relate with the movie Aha Kalyanam, where again Shruti is the same protagonist. What is important is also to take into account that these entrepreneurs at the grassroots level are also helping the local economy, because an improvement in new firm creation also leads to GDP growth. An increase of 10% in the new firm creation translates into an increase of 1.8% in the GDP growth in the district. If you go by the World Bank data for new firm creation, it has picked up pace since 2014. The annual growth rate up till 2014 from 2000, if you compare with 2006, was 3.8%, while that after 2014 is 12.2%. And what is quite important actually to keep in mind here is that the new firm creation is particularly pronounced in the services sector, which also is consistent with a macro fact that we know very well that is a service sector that is an important contributor to value added in India. So the micro data using entrepreneurship at the district level is consistent with the macro data saying that services sector is a really important contributor to value added. I spoke about some of the pro-crony policies, and I'm now going to contrast it with pro-business policies that enable opportunity. What is being shown here is the churn in the index. When we compare the 1986 index vis-a-vis the 1997 index, which is pre-liberalization versus after post-liberalization. What is quite clear is that if a firm was in the Sensex pre-liberalization, it could expect to be in the Sensex for a long, long time. In contrast, after liberalization, there is significant churn. By the time 9 years happen, about a third of the firms that actually were there in the Sensex originally are present, which shows the churn that is happening in terms of firms, in terms of sectors, the technologies that they bring. This is a very important point for wealth creation, because when you have new technologies, new firms coming in, not only do they benefit by bringing in these technologies, but more importantly, they keep the incumbents on their toes by providing them healthy competition. Now, this is also apparent if you look at the way the Sensex has evolved in terms of the various sectors that are dominating the Sensex. Notice that if you looked at in 1986, it's the material sector and the consumer discretionary sector which was a large contributor to the Sensex in terms of the value added. But if you look at it today, their presence actually decreased significantly. A sector like the information technology or the financial services sector, which was not even existent in 1986, now has significant presence in the Sensex, which is basically consistent with the churn that is happening post-liberalization. So this is a very important aspect of wealth creation, which is pro-business policies that provide opportunities to the incumbents, to the entrants, to be able to compete on a level playing field with the incumbents. Another important aspect of wealth creation is basically looking at laws that possibly have lost their relevance at this point in time, and look at the unintended consequences that can be created when government intervenes where there is no need for such a thing to happen. One example that I'm going to pick is the Essential Commodities Act, which was enacted in 1955. The Indian economy in 1955 was a very different economy to what it is today. The 1955 India was one that had suffered the ravages of famines, food shortages, and had just emerged after the Second World War and independence. And therefore, the kind of market failures that the economy faced at that point in time were very different from what it is today. Today, India is an economy where food is produced in more than demand. So food shortages are a thing of the past. So it's very important, therefore, to make a distinction between storage and hoarding. If traders are unable to store, then they will not be able to basically smooth prices. So this distinction needs to be made. We should not be looking at every storer as necessarily a hoarder.
All right, that's essentially the sum and substance of the economic survey from the CEA, something that we discussed with our guests as well. Let's wait and watch what finds mention within the budget tomorrow. Let's take a look at the markets though, and we were in the green for almost all the three key indices. Right now too, the Nifty is just about barely in the red, but banks are certainly piloting along, so about 1% higher, and that's essentially courtesy, one, Kotak Mahindra Bank, but two, some of the others. SBI is reacting to its numbers and the asset quality and a few other details. We'll hear from the management as well in a minute from now, but 2.5% up for the big boys, so that is giving support to the index. There is also strength in IndusInd Bank, and mind you, today stocks like HDFC, Bajaj Finance, Bharti Airtel are all trading in the green, so that's actually a good sign. What is not doing well? Some of the PSUs and Tata Motors. So ONGC, Power Grid, Indian Oil, Coal India, GAIL, almost everything which is a part of the CPSC ETF is all correcting today. Tata Motors is down about 4.5%, so keep that at the back of your mind. And lastly, at the broader end of the spectrum, a lot of good numbers came out. I wonder if The likes of Lotus Labs, etc., are still in the positive because the numbers look pretty healthy. But the one that stands out for me at the lot is a stock which is losing out today, and that's Bharat Electronics. It's down 10% BEL after the numbers left a bit to be desired. The ask on the fourth quarter to meet the 15% guidance was too much. I think the management has reduced it, and therefore the stock too has corrected. Okay, we have the SBI management getting ready in a minute from now, but Navneet, just quickly, let's also highlight what's happening at the more liquid end of the universe.
Well, Neeraj, it's day one of the new series, February series, and we've been highlighting how we've started this new series on a very light note. The rollovers have been on the lower side. So pull up Nifty Futures and Nifty Bank. Let's see if there is any significant build-up which has come about, considering tomorrow is an important event. So on Nifty Futures, okay, you never see 22% rise just in a single day. That too, day one of the new series when the trading activity is usually tepid. So there are positions maybe being taken, but these could be intraday trades as well. And not to forget, Nifty is already gyrated 140 points in trade. So we're off the day's high and off the day's low, somewhere in between right now, 12,033, breaching that very crucial mark. So now it remains to be seen whether the closing can come above the mark of 12,000 or not, which is a very, very big support. Remember, put writers are still active, though we breached that mark, but still we've not seen any unwinding coming around the 12,000 put so far. And on the call side, writing still continues, so 12,100 or rather 12,130, which is the 50-day moving average, will continue to be a very, very big resistance even on the upside. 10 lakh shares have been added there so far. Neeraj was talking about Bharat Electronics, so let me start with that stock future, and I want to highlight how open interest build-up has come about today, and it's purely on back of those poor set of numbers. It's fallen on very, very heavy volumes on the cash side, and the futures will just tell you, last when I checked, the open interest for the February, now it's 80%. So telling you how even at these lower levels, traders are betting on the short side of Bharat Electronics. Century Textiles is the other one in a weak market. Suddenly the stock took off in somewhere midway around 12:31 p.m. Fresh long positions have come about, and not to forget, it's one of the outperformers of last series, was up 26%. So long positions continue here. And also Kotak Mahindra Bank, which has been supporting Nifty Bank. In fact, Nifty Bank, which has underperformed Nifty for last two series, since morning today it's been outperforming Nifty. It's crossed the 50 DMA with the move of 4% we've seen, and of course long positions have come in here as well. So net in terms of levels, tomorrow is an important day. What levels you should watch out, especially on Nifty, 50 DMA will be a resistance on the upside. We've been highlighting 12,130 is that level, and in case if we close around the 12,000 or below that mark, 100 DMA becomes very, very important, which is somewhere about 11,800. In fact, that's what most of the traders have been, technical analysts we've been speaking to since morning have highlighted. If 11,800 gets breached on the downside, probably we could be in for more downside. But having said that, let's cut across to the presser of State Bank of India, where management is addressing the media.
It has been a very strong operating performance for State Bank of India in terms of profits, profitability parameters, asset quality, the provision coverage ratio, and capital adequacy. In terms of business performance, a strong growth in deposits, a strong growth in the retail advances, which covers all our personal loans, housing loans, agriculture and SME. Not so good growth in corporate loan book. I think that would be the only discordant note as far as the performance of the bank is concerned in this quarter. The PBT, the numbers are before you, 10,900 crore, which is a 65.74% improvement YOY. The net profit, 5,583 crore. Again, YOY growth of 41.18%. Here, one fact which I would like to mention is that the DTA on account of loan loss, that has been reversed, and from this quarter, which is March 20 quarter, we will be moving to the lower corporate tax rate of 25%. The gross NPA have come down sequentially as well as YOY, same is net NPA. The provision coverage ratio again have gone up both sequentially and very substantially YOY. We have also mentioned in our press note and the filing to the stock exchange that there was a slippage, one large HFC which is under administration, but that was known in September quarter, and the total amount loan book is 7,100 crore and the bond of about 2,900 crore. The bond, the mark-to-market provision of 50% has been done as per the valuation given by FEDI. On the loan book, 20% provision has been done, which is higher than what is required by the regulation. And the overall provision, if we take into account the bond and the loan, the current provision is approximately 29%. And in this quarter, which is March 20 quarter, based on the progress of the resolution and the overall assessment about the recoverability, we will provide whatever is required during the current quarter. So considering that there has been challenges before the banking industry, I would consider that with some help from IBC, where bank had a very good recovery as far as SR Steel is concerned, which was one very large asset which got resolved during the quarter, and of course some setback on account of slippage of the housing finance company. And these are the two, I would say, exceptional items, both on the income side and the expense side. But otherwise, on all parameters, the bank's performance has been very satisfactory from the management's point of view. So I am ready to take the questions after this brief review of the performance. All other parameters about the bank's leadership in technology, bank's performance in financial inclusion, performance of subsidiaries, again all areas, the performance again has been very, very satisfactory.
You did say that in the worst case scenario, credit costs would be at 1.6 to 1.7%. Now, keeping this in mind, divergence is done, the large HFC has been recognized. Where do you see credit costs by the end of the?
So credit cost is something, because the variables are, you get some provision write backs also. You make some provisions. But if you look for the current quarter, March 20, the provisioning requirement will come down substantially for two reasons. One is that on the corporate side, these slippages would be very, very nominal. Then we have given you some analysis of our ICA, the accounts under ICA. There, on the slide number 24, that presentation may not be with you, but ICA, the total provision requirement in worst case scenario is not going to exceed 1100 crore rupees. And this is in respect of those accounts where NCLT filing has not been done and there is an effort to resolve these assets, and this slippage in the entire list of ICA accounts, 32 accounts, only 2 accounts are standard and the fund-based outstanding is just 493 crore. If we look at our SMA2 and SMA1 list, again, there is a huge improvement in the SMA2. So going forward, there is no big ticket loan in sight which is likely to slip. And corporate slippages are very much under control. Retail, our slippages other than agriculture and partially to some extent SME, all our slippages are very much under control. So the way to look at is that ultimately, if we talk about March 21, then what would be the slippage? And the way to calculate is that whatever is the slippage, we provide 70% as a thumb rule. All the regulatory requirement and write-backs, so very difficult to give you an accurate idea. But the way I will calculate is that whatever is our slippage ratio, our credit cost will be 70% of that.
Sir, agri has remained elevated at 2,900 crores even in this quarter. Could you give us some color on why, which are the specific geographies where you're seeing problems?
So any geography wherever the debt waivers have been announced, there the recovery performance and the renewal performance has been impacted. And that is the reason why we are seeing elevated NPAs in the agri segment. And I believe that in the next quarter or current quarter, whatever you call it, means March 20 quarter, agri also it will be completely taken care of. And that would also depend upon that we are expecting some clarification and guidelines from Reserve Bank of India. So depending upon whatever is the position.
So what guidelines are you expecting from RBI?
Relating to agriculture, because there was some clarifications which were required. So we are expecting that clarification will come.
How is that likely to help the bank once these is total coming? Do you then take care of the whatever is slipped?
No, whatever is required as per regulatory guidelines. As I said that there was some confusion maybe at our end or maybe the RBI guidelines also. So we have sought clarification, and once that come, that would impact. But overall, I don't think that on the corporate book, whatever is the position correctly and in our assessment, even in March 20 quarter, the slippage in corporate book are not going to exceed 1,200 crore, because we are on 31st January. So it is just a 60 days more. So whatever is the current situation today. And as I said that we have given SMA 2 and SMA number also for all accounts which are 5 crore and above. There is no new addition to ICA list. Whatever was there, there is no new addition. And from 1st January, the threshold has been now reduced to 1,500 crore as per 7 June circular of Reserve Bank of India. So overall scenario on the corporate book seems now to be very, very normal. No large ticket loan under stress. And retail, as I said, housing, personal, car loan, all we are doing very well. There is no issue. SME, whatever has been in the past, no major change. Agriculture is something which we have seen 3,000 crore average slippage in every quarter. So it may not exceed that 3. So we are looking at a number of slippage of not exceeding 5,000 to 6,000 crore in March 20 quarter. And going forward also, if we maintain the same trend, then the slippage, whatever I had said earlier also, that the expectation is that we should be able to have a normalized number of anywhere between 30 to 35,000 crore.
Sir, is there a watch list that is maintaining the SMA?
We are now just doing SMA 1, SMA 2, 5 crore and above. Whatever gets reported to Reserve Bank of India, it is a click data. So other than that, we are not maintaining any watch list, but we are maintaining watch on all large accounts.
आने वाले महीनों में तक जो क्रेडिट ग्रोथ का जो आउटलुक है उसमें थोड़ा बहुत हम बदलाव कर रहे हैं, क्योंकि आपने कहा थोड़े स्ट्रेस के साइन है.
नहीं, स्ट्रेस के साइन नहीं है, लेकिन जो कॉर्पोरेट क्रेडिट की ग्रोथ है, जैसा मैंने कहा कि हमारी जो क्रेडिट ग्रोथ है वो अराउंड 7% है. तो उसमें लार्ज कंट्रीब्यूशन हमारी इंटरनेशनल बैंकिंग बुक का है और रिटेल बुक. कॉर्पोरेट बुक जो है YOY अभी भी नेगेटिव है, लेकिन जो ये हमारे सैंक्शंस हैं वो पाइपलाइन काफ़ी अच्छी है. तो उसका जब डिसबर्समेंट होगा, हमारी सैंक्शन वर्किंग कैपिटल लिमिट्स हैं उनका यूटिलाइजेशन इम्प्रूव होगा, और फरवरी मार्च में एक्टिविटी भी बढ़ती है थोड़ा सा कॉर्पोरेट की. तो जो पहले हमारा था कि 10 से 12% की ग्रोथ होगी, वो 10% तक पहुंचना थोड़ा अभी मुश्किल लगा। ये उसका प्रभाव नहीं है, क्योंकि हमारे जो डिपॉजिट रेट है, चाहे वो सेविंग्स बैंक हो और या करंट अकाउंट तो ज़ीरो ही होता है खैर, और जो टर्म डिपॉजिट है वो लो होने के बाद भी, लेकिन टर्म डिपॉजिट्स का फ्लो स्टेट बैंक में बहुत ज़्यादा है और बेस भी बड़ा है टर्म डिपॉजिट का, इसलिए जो सेविंग्स बैंक की ग्रोथ है और करंट अकाउंट की ग्रोथ है उससे ज़्यादा फास्टर ग्रोथ टर्म डिपॉजिट्स में, इसलिए थोड़ा सा काशा पे इम्पैक्ट है।
So your SMA 1 and 2, that portion has come down sharply from 18,000 to 8,000 crore. What would you give that credit for? Is it largely because of slippages?
No, it is not largely because of slippages. It is because of many accounts got upgraded and recovered. Because in this list, the HFC account was not there in SMA 1 and SMA 2. So if you look at our slippages, so whatever improvement is there, it is on account of recovery and upgradations.
7,000 crore got recovered and 3,000 crore got upgraded.
So that's why we are seeing this decline. It is not on account of, as I said, that our major slippage is HFC, which all we knew. That's all.
7,000 crore got
One by one.
बात कर रहे हैं
Regularized.
की तरफ से भी आरोप लगाया गया कि 12,000 करोड़ का डाइवर्जेंस वगैरह हुआ है, क्या सर आपकी तरफ से FIR रजिस्टर कराई जाएगी?
ये रेड फ्लैग्ड अकाउंट है स्टेट बैंक में, और क्योंकि कंपनी एडमिनिस्ट्रेशन में है और एडमिनिस्ट्रेटर जो है वो भी ट्रांजैक्शन ऑडिट कराते हैं, तो जैसी पोजीशन क्रिस्टलाइज होगी तो जो भी उचित एक्शन बैंक को लेना है वो हम लेंगे।
You've also written off about 10,500 crore. I understand you do always say technical write-off, but
टेक्निकल राइट ऑफ इस बार ज़्यादा नहीं है।
Come down.
Very. No, we don't have any technical write-off. But what we see, basically, the write-off is related to the recovery.
Recovery.
Wherever we do partial recovery, the rest of
oh,
the
so the rest of it takes.
That's
सर डिपॉजिट इंश्योरेंस का जो चर्चा चल रही है कि उसे बढ़ा के 2 लाख से ज़्यादा कर रहे हैं, तो इस पर आपका क्या मत है? जरूरी था
एक दिन का इंतजार ही कर लेते हैं, अब उसमें मत देने से कोई फायदा नहीं। कल का बजट देख लेते हैं, उसके बाद मत दे देंगे।
Just to get a sense of, one of your other publicity peers has said that we've seen people go out of the corporate credit pool and as lending pool, because of which there are now opportunities and therefore there is also pricing power for banks who have the risk appetite. Is that something that you're targeting for the new financial year? How much are you looking for? What are the kind of assets you look for?
You mean takeovers or something?
Takeovers or fresh lending?
नहीं, देखिए फ्रेश लैंडिंग स्टेट बैंक की प्रोजेक्ट फाइनेंस में लीडरशिप है, दैट इज कंटिन्यूइंग, एंड opportunities whatever come. Our only limitation as of now in many large value accounts, we are constrained by large exposure framework. That is a limiting factor. For many of the banks and particularly in private sector, they have headroom available, and that's why they are able to grow their book in those top rated corporates, whereas I can't do that because we have already hit the LEF. So that is one limiting factor, but other than that, wherever there are opportunities in corporate lending, whether it is project finance or balance sheet based lending, any proposal which meets our underwriting standards, we are doing it. And in fact, our credit committee is doing a decent job. I hope that we will have some positive outcome of whatever effort State Bank people, both on the marketing side and the credit committee side, they are putting in. So its result is not visible in December quarter.
If we divide,
Yeah, Arijit, you want to say
just
something?
Supplement on answering your question. Term loan, there is actually a growth. So it's about 10%. Working
17%, 1,75,000 crore.
1,75,000. And but in working capital, the utilization is much more. That has come down by about
Yeah.
28%. So
Across the board?
this is for corporate.
Large corporate.
Large corporate.
Credit reports are you auditing? Is it still 10 to 12% or so?
10 to 12 will be difficult. It would be now more in the range of 8 to 10.
How does recovery get impacted in the macroeconomic situation that we're in? Does recovery get impacted a lot because of that? Because buyers may not come?
No, the recovery will not get impacted. It all depends upon one is definitely the industry. Second is the quality. So we saw that we had very good recoveries in the steel sector. And at particular time, in just cyclical, this is a cyclical industry. So that's why, despite the fact that the scenario in last 6-8 months was not as good for the steel industry, but things are now looking up. But still we got good recoveries on the strength of the, say, location of the plant, quality of plant and machinery. So there are multiple factors. But one thing is definitely if an industry is doing well, you can expect better recovery. Then you need a good quality asset. In manufacturing sector, that matters. And if it is a services sector, then whatever is the industry scenario, you get badly hit. The recoveries in services sector are generally poor.
One last question from here and then we'll take on the print.
On the telecom sector, because of the current scenario, what is the total exposure to loss funds? And are you making some, provisions or are you buffering in some kind of way for any future hit that may happen?
So whatever was the NPA, and it includes 2 large accounts, our provision coverage ratio is 97%, almost fully covered. And whereas as per the resolution plan in one case which we have researched, we will be recovering, a good recovery, I would say, again in the given circumstances. Telecom sector. And the resolution plan is in advanced stage. So we have not felt the need to make any additional provision on the telecom sector, because we believe that the recoveries which are likely to happen, at least we have cushion for the telecom sector. And I also believe that the matter is likely to be sorted out given whatever is the current actions taken by the various stakeholders.
All right, that's the management of State Bank of India addressing the media on the numbers, which largely look good. The asset quality has improved on sequential basis. Of course, slippages number could have been on the higher side of about 16,500, but they've also given a guidance going into the Q4. They said the slippages will not exceed the mark of about 5 or 6,000 crores. So net, it looked like a good quarter, and that's the reason why you are seeing the stock also witnessing that spike up nearly about 3%. Good time to bring in our guest on board and get their view also on SBI. Amar Singh of Angel Broking will be joining us to talk about the technicals, and we've got Mr. Harihar of HRBV Client Solution, who's right here with us in the studios. Hi, Hari. Good afternoon, and thanks for waiting by. What did you make of the numbers? It's an important Nifty company. Whenever we talk about the 15 to 20% earnings growth for Nifty, I think majority of that contribution that analysts pencil in is coming from SBI. Do you think the worst is behind them now?
It looks like, and I've been saying that for quite some time, that the NPA cycle at SBI seems to have bottomed out. And if you see, while the slippages have been a little high at 16,300 crores, I would believe that the sharp fall in gross NPA is probably testimony to the fact that the overall, I think, NPA cycle seems to have bottomed out. There still are a lot of problem issues. I think there is a DHFL, there is Jet Airways still not provided. There is ILNFS still not fully provided. I think there are a lot more of these kind of problem companies where we may see spillages over the next few quarters. But I would strongly believe that in terms of gross NPAs, the worst may be over, the cycle may have. I think a big challenge for SBI now is I think their gross NPAs in rupee terms about 1,20,000 crores. I think they need to bring that down to a more reasonable level. So once that happens, I would believe that SBI should be a much better bet from an investment perspective. We have liked the stock more as a sum of parts at this this point of time. But I think once the gross NPS come below the 1 lakh crore mark, I think even from an earnings perspective, the stock will look a lot better.
In fact, the recovery is definitely helping the bank, be it from SR Steel case or Ruchi Soya and Jet Airways, since that is too in IBC. Let's hope if there are any bidders and if that's successful, bank can even get more recoveries going into FY21. But let's also get you a technical check on the markets and a couple of these stocks. Amar, good afternoon. First, a call on the index, which breached the mark of 12,000 today, but we've recovered from the lower levels. Do you take any trade, considering tomorrow is a crucial day, or you would wait by for a directional move to come by?
Yeah, I would say that looking at the index, what we've been seeing is that over the last few trading sessions that we are seeing some sell-off happening in the index ahead of the budget and unwinding of positions also. But what we see is that 11,950 is a very crucial, 950, 12,000 is a very crucial zone of support from where the index, that is Nifty, had taken support and bounced back. But I would be slightly cautious ahead of the budget tomorrow, because on the upside also we are seeing crucial resistance coming around 12,100 to 150 for the future series. And if you look on the daily charts, clearly shows that there is some negative, I would say, trend on the daily chart. So clearly signifying that we could witness some selling pressure as well. But this is a range I would watch out for before taking any view on the or position on the Nifty.
Okay, very quickly then, I think we've got Brijesh Singh also of StockAxis. Hi Brijesh, good afternoon. Bank Nifty seems to be outperforming today. Are you taking any bets there?
Good afternoon, Navneet. See, no doubt, if I talk about the Bank Nifty, still 30,500 and 30,600 is a level where the support has been maintained and it has not been broken. Or 30,600 on a closing basis still has been holding on. But the importance at resistance wise, if I talk about 31,200 to 31,250, it still has been acting as a resistance. So that has to be crossed. So at this juncture of time, I would not be going on a buy side. But if somehow if I get Bank Nifty trading below a level of 30,800 around, or say 30,850, then one can take a position in it with a strict stop loss of 30,600 and play for the target of 31,200 to 31,250. So I would be waiting. Buy on dip strategy can be applicable right now. I would not be trading. No fresh trade.
Okay, stay on, gentlemen. There's an earnings interaction that we have to do. Kansai Nerolac reported an 8% degrowth in its top line as both decorative and industrial businesses saw a dip in demand. The company is also significant exposure to the auto sector, where it continues to possibly see the impact of the slowdown. Let's discuss the quarter gone by with Mr. H.M. Bharuka, the Vice Chairman and Managing Director of Kansai Nerolac. Mr. Bharuka, good having you. Thanks so much for joining in. Just talk about the near term first, then we'll get to the medium term. The quarter probably didn't turn out as per what you would have otherwise estimated. What can change from what's happened in the quarter, and what was the biggest pain point in the quarter gone by?
So I think it was expected that auto is not going to do well, and that is where I think we have been hit badly. So auto has degrown by more than 20%, and which is what you can see reflected in our top line. Decorative, we have a positive volume growth, which is marginal by about 1%. But we have not gone for heavy discounting in the market to get the volume. So decorative also has been slowed down, but this slowdown was expected because of the extended monsoon and early Diwali, and because of some issue which is going on in Kashmir. So to that extent, I think decorative has done well. Auto was expected to do not well, I would say. So overall, I think the whatever number we have declared is in line with what we had thought. I mean, most important for us is profitability, which has gone up by about 230 basis points.
Would you expect that to be the chart course ahead as well, Mr. Bharuka, that you will continue to focus on operational costs reduction and therefore profitability enhancement even if volumes don't revert? And is there a way to, or is there a possibility to try and even predict when is it, by what time period could volumes stabilize and show an uptick?
So, as far as auto is concerned, I don't think it is in our hand as of now. Auto, we do expect that next 3 to 4 months are still challenging. We will have to see what would be the effect of B6 in the market, and significant would be in terms of, I mean, for a two-wheeler industry where the cost is going to go up substantially. So I think auto would still remain a challenge next 3 to 6 months, according to me. We can't predict what will happen on auto. So auto will have a degrowth, according to me. But maybe, not to that extent what we have seen in the first 9 months. So there would be recovery, but still it would be degrowth. On the decorative side, I think we should do well. Decorative, I don't think there is an issue, so we should do well on decorative. We should get maybe good single-digit volume growth and value growth on decorative side.
Mr. Bharuka, if I got it right, you mentioned your volume growth from the decorative business was 1%?
Right.
So that's lower, right, even on sequential basis, because you'd been registering a good volume growth on the decorative side, and that's what we've seen from other players too.
I mentioned to you that first this quarter was an extended monsoon as well as the festive season Diwali, which was in the earlier quarter. So obviously this got affected, and one can go and buy the volume by rebating. If whatever you are actually speaking, if you look at our profitability, which has gone up by 230 basis point, maybe if I have given 100 basis point in the market, my volume growth would have come. But it was important for us to get to the profitability because profitability was affected last year mainly on account of auto. And with auto significantly down, it is very important us to ensure that we have a good profitability. So how do we find a balance between top line and bottom line was our goal.
And you have given precedence to that because going by a press release, the margins, EBITDA margins have expanded by almost 230 basis point, which have come in at about 15%. So will that be the focus now going ahead? Will you focus more on profitability, pricing versus volume?
We would focus on both. As I said, for us, we have a mix of industrial as well as decorative. And if industrial doesn't do well, it does not mean that we would not concentrate on decorative. But when the market is bad, there is no point in buying the volume by throwing the money because it has a long-term implication. And I don't think we need to do it. We don't need to bring down our brand actually. So that was our strategy. I am not sure what we would do in coming quarter, but finding a balance between top line and bottom line at the same time maintaining the profitability what we have achieved would be our goal.
Okay, and give us a sense on pricing, sir. Average prices at the end of Q3 versus now, has there been any change?
So marginally better, I would say, because as mentioned, premium product we have sold more, and the value and volume difference is not much in case of decorative, whereas in the earlier 2 quarters there was a big difference between value and volume. So the ASP has gone up compared to the previous quarter.
No dramatic changes on the back of the 2 answers that you gave, Mr. Bharuka. Just intrigued. No dramatic changes in market share for you, I reckon?
Yeah, there's no change in the market share. I think market share is static.
Okay. One quick question again. I know you elaborated a bit on margins already, but this input cost tailwinds that would have come, have they only gotten better in the quarter with crude prices coming off? I know they come with a bit of a lag, as you explained earlier, but I'm just wondering, with the current crude price trajectory, does it augur well for input costs and therefore margins going ahead too?
Yes and no. It all depends upon the availability of derivatives. Just by reducing crude oil prices, derivative doesn't go down because the capacity of derivative also needs to increase. So you saw earlier also when the crude price goes up, derivative cost goes up. But when it goes down, it doesn't go down for simple reason that derivatives are not available. And with the problem which is going on in China, I think there could be some supply disruption which may take place. So one has to be very, very careful. So I don't expect prices to go down. And it is too volatile, for us to make any comment because one day 2% down, another day 5% up. So I mean, the final prices are not determined on that basis.
Okay. Would you need to undertake major ad spends? I know you mentioned that you don't want to reduce your premiumization, but would you need to increase the ad spends, and would that have an impact in Q4?
No, we are, our ads, marketing expenses are moving in line with the top line growth. So it's in relation to that. So if it grows, we would increase it. If it doesn't, there is no need.
Okay. Can you leave us with any kind of idea or guidance about what you would do in Q4 and thereby for the year, Mr. Bharuka?
So quarter 4, I would say, would be better than the quarter 3 in terms of top line, and I'm sure that should also get reflected in the bottom line. So for the entire 9 months, we have increased our profitability by almost 200 basis points, and our aim would that to be maintained. We would not like that to go down. So the profitability we would like to maintain.
Okay, we wish you all the best, Mr. Bharuka. Thanks so much for joining us and giving us that perspective. That's Kansai Nerolac. Hari, do you track this one fundamentally? You heard him say this. What does it paint for you?
I'm not sure how much of that is really, I would say, relevant from a market valuation perspective. See, what's happening in the paint industry is something very different. Now, if you look at it, the entire paint industry is getting stratified into 2 segments. There is on the one end, there is a solution-based paint companies like an Asian Paints or a Berger Paints. And then there are more of these commodity paint companies like Kansai Nerolac and a host of others who are predominantly, unfortunately, into automotives. And that is a segment that has had a very, very bad time. And in the automotive, it is not just about demand degrowth. It is also about the fact that they are facing higher costs due to Bharat 6, and that means they are going to reduce their spend as far as this paint component is concerned, and that is also going to impact. So, auto-driven companies are going to be in deep trouble. But the bigger point is, if they want to make a dent on decoratives, and I'm not surprised they're not growing on derivatives, they have to get into the solutions mode, which is what I think the likes of Berger and Asian Paints have done extremely successfully. So I think they are kind of somehow, caught between 2 stools. So then that is where the problem for Kansai is arising right now.
Okay, so that's the issue for Kansai, and that's Hari's view. Well, the stock is down about 3.5%. It's definitely not a part of the Fab 4 list. By the way, just before we get to the Fab 4 list, just mark the markets, because after almost being in the green, we've once again come off. So there's a bit of a pullback in the Nifty 50 in the last few minutes. Let's wait and watch. We are waiting 2 major results from the consumption space, which will be very important considering what some of the other consumption names are doing. Marico is down 5% today, yet again. Colgate, after that slam dunk, down another 4%. So it's not been a great last 2-3 days for some of these mid-size FMCG names.
That's right. I think only Dabur has managed to stage that rebound today, and that stock's up. But Marico clearly disappointed the street with negative volume growth, and Colgate, of course, we know there was a decline when it came to on sequential basis in terms of toothpaste segment volume growth. So that's down another 5% after tumbling nearly 5 to 6% even in yesterday's session. All right, let's quickly get you Fab 4 stocks first from Sharad Dubey, who joins us. Hi Sharad, good afternoon. What's featuring in your list?
Well, hi Navneet. The first stock is India Bulls Real Estate. It's locked in upper circuit of 5%. It was a very important announcement the board came out with its restructuring program. So basically the board has given in principle approval for the merger of commercial and residential assets of Embassy Group with the company itself. So it will be a merged entity. The share swap ratio has not been decided yet, and also the Embassy Group is in discussion with our financial investors such as Blackstone Group to raise almost $200 million before the merger happens. Up next is Nesco, which is up almost 5.1%. It is trading near its lifetime highs, and the street still expects that the company is having a debt-free on its books, and also stable cash flows is expected for the company. So the street expects something positive going for the company. And the next is Century Textiles, which is up almost 5.2%, as fresh longs is seen with a high open interest of almost 21% and volumes trading at almost 4 times its 8-day moving average. And the last stock of the day is V-Guard Industries, which was up almost 1.5%. It came out with an operationally stable numbers itself, with the margins increasing by almost 300 basis points to almost 9.5% due to low copper prices. Back to you.
All right, Sharad, thanks for bringing those Fab 4 stocks of the day. And keep an eye on the markets, 11,960. Once again, it's down about 70 to 75 points. Hari, before we thank you, it's an important day tomorrow. Finally, we'll get to know what comes out from the budget. But any key expectation from your side? If not, any idea that you want to share with our viewers in terms of stock picking?
See, I think the big news in my view is going to be the the Temasek model that they spoke about in the economic survey, and I think that has to happen because the government is kind of starved for funds, and they need a very, very quick model to kind of monetize all their PSU holdings. So I think something like a sovereign fund, Temasek fund could really happen in this budget. Other than that, I'm not too sure what are the big kind of big bang things that you can really expect in this budget.
All right, I guess the street is expecting, or rather the salaried class is expecting some bit of direct tax rationalization. Hari, thank you so much. We'll leave it on that note. But moving ahead, we've got Deepak Shenoy of Capitalmind also joining us on the show. Hi, Deepak. Good afternoon. Good to have you on the show once again. How are you assessing the entire situation now? Economic survey has been tabled, giving their growth targets for next year. earnings season so far, I believe, has fared well, barring few glitches here and there. And of course, tomorrow being the budget day. What's on top of your mind? What's the key thing which is topping your wish list right now?
Hi, and thanks for having me on the show. I don't have very deep expectations from the budget in terms of massive changes. The government is a little constrained. What I'd like to see is them, any attempt to raise revenue which isn't actually by increasing taxes. I don't think they should or can reduce taxes, but that's not a popular view, so I'll leave it at that. But I also feel going forward, the government balance sheet is constrained. Given that, will they do something that is fiscally extreme? Perhaps the economy deserves it, but at the same time, you might end up with an S&P or a rating agency downgrade of the country as a whole, which will hurt a lot of corporate borrowings, which will go into sub-investment grade. So I think, there's a lot of complex things playing out. I just hope, we get a budget that is not extreme on hope. At this point, the economic survey usually is very delinked to whatever the finance minister eventually has to say. I say that because mostly depending on the economic survey for direction has not really worked well in the past. But the economic survey does come across with some very positive points. I think, as a country, we've just crossed $2,000 per capita GDP. This is good for us. It's been a while since I've been waiting there for that to happen. But the growth from now on should kind of start looking good naturally without needing too much government help. But let's see if the government actually tries to provide a fillip to that or puts a spanner in the works tomorrow.
Okay, 11,949 on Nifty right now, and telling you just 15 to 20 minutes for the markets to shut shop, and you are seeing more of selling pressure coming by. What's dragging the pull up Nifty Metals Index? I think that's a day's low. It's seen cuts about nearly 2 to 2.5%. And what has also been a drag today is the Nifty IT and the Nifty Auto Index. Both of them are seeing severe cuts of about 1% to 1.5%. And I think both the indices are at day's low. But there are a few shining points as well. So NIT Technologies has rebounded. They came out with the numbers 2 days back, and there was some profit booking, but now once again the stock's seen gains of 5%. Amar Singh, come in on the charts for NIT Tech. Would you take a bet after a gain that we've seen of 5%?
Yeah, looking at NIT Tech, what one can see is that the trend definitely remains positive. But what we are seeing on the weekly charts is that there seems to be an upside, very crucial resistance of the recent high that was 2059, and that was last week's high was 2059, and this week's high is 2042. So 2040, 2060 is a very strong resistance for NIT Tech. So I would not recommend buying at these levels. Rather, one should look at booking some profits around, because if we don't see a breach above 2050, 2060, then the stock has a potential to correct towards 1800 levels.
And the other stocks which have been active are the likes of Century Textiles, one of the top gainers of previous series as well, and that's had a good start to the February series. Put up Century Textiles, which is up about 5%. Brijesh, would you take a bet on Century at 645?
See, definitely, if you remember, I have told that last time when we have a conversation regarding with the Century Textile, it has made a bullish flag pattern, and somewhere around 535 or 530 around, I have recommended on Darshan show hot money for the target of 595 to 600. Still, the overall trend has been bullish. So I would be suggesting till stocks trades above 610, nothing wrong in it for a short-term bet has been concerned. If someone is looking for the momentum bet, then I would be saying 625 is a nice support. So keeping that thing as a stop loss, one can look out to go long in it for the target of 675 to 680. For a short-term investment then keeping a stop loss 610, look for the long side for the target of 725 and 750.
By the way, I must say that there are select stocks which are just doing a remarkable job of gains. Jubilant Foodworks is now at 1882. and counting. Some big move there and it's trading nearly at the highest point of the day. Avenue Supermarts is up about 3%, the row free float, but valuations notwithstanding, this is one stock that just keeps on rising. But Deepak, Shenoy, the pocket that has really amazed people with the fundamental performance that they've given is this back-end manufacturers. Amber Enterprises numbers were good. Dixon, we all know. And Dixon right now, another 4.5% at 4,700. I remember when that whole sale, the sales happen and how Xiaomi really topped the charts, and because Dixon was the largest back-end manufacturer, it was at 3,300 then, 4 months ago. It's at 4,700. Do you look at this pocket and do you like it, and do you like it at the current valuations?
Well, I mean, I've been actually looking at Xiaomi stock in the US, or rather in Hong Kong, that has been trading. It actually went and dipped quite substantially and now has been rising as well. I think the numbers, their numbers also have been quite good. And it's a growth stock, Xiaomi is at least. I haven't seen Dixon per se, but as a contract manufacturer, I mean, I don't know the prospects here per se, because they don't actually control the consumer. I'd rather actually bet on the manufacturer here than on, the brand owner here than on the contract manufacturer. But given that, perhaps Dixon can be a proxy, maybe there is some growth element there. I'm sorry, I don't have much more than that for the books. I haven't seen the books of Dixon as of now, and I know Amber had some good results. It's on our to-do list for checking out for the next month, but again, I don't have a view on it at the moment.
Okay, do you have a view on IRCTC, Deepak, Shenoy, the model there? I mean, listing at 600 odd, which was anyways at a premium, it's now at 1203, ahead of the numbers which I think are on 12th of February.
Yes, as a big disclosure, we have a position in it, and I'm very happy that it's gone up, But we started looking at it, in fact, after the listing. I was initially of the impression that the government company can't do much, but look at what it's done. Apart from the fact that the stock price has risen, look at the fundamentals. They've got a 270 crore profit in FY19 after tax. But this year, there were 400 plus crore extra money coming in just from the booking fee that they've started to charge from September. They'll probably get about 200-300 crores in this financial year, and perhaps 450 crores in the next financial year. They book over 30 crore tickets. They're also one of a monopoly provider of water on all platforms and trains, and they're building 8 new factories to be able to increase supply. They have taken over, I think, a couple of trains now completely in terms of operations, where they pay a fee and collect all the revenue from the train operations. That will reflect in results. I'm waiting for this quarter's results, because at least one of those trains will start to reflect. They will also they've seen an increase in the menu prices starting November onwards, which will also add to bottom line, because the price increase will directly increase margins. With all of this in place, and the fact that they're actually looking at innovation, and I think Coimbatore, they tried to even create, or they've been experimenting with creating lounges, executive lounges, which is AC with internet and a meal or food and a shower on the stations. Again, they have a monopoly on this, so they can do this at all stations if this is successful, for a fee, of course, like the airport lounges, except here the fee will be lower. But having said all of this, it's an amazing business. But remember, again, it's a government company, so a lot of things can happen, a lot of things can change. But I really, really like the way they're doing things and operating and using their monopoly kind of to get maximum bang for the buck, if you may. And I think it's a good stock. But again, at this price, it's expensive. I think at 1,500, I might just stop buying. But I still think there's a long way to go. This is still a 20,000 crore company for what is probably India's largest e-commerce participant, and one that's profitable at that.
Okay, and all these expensive companies, Deepak, are only getting more and more expensive. Let's see if we can actually, the month of January has given that trend of broad-based rally, but whether that lasts or not remains to be seen. IRCTC going from strength to strength. It's up about 7% now at day's high. Having said that, let's get you some closing strategies from our technical experts too. Brijesh, let me come to you. Looking at the price trends, anything specific that's popping up that you would give it as a closing strategy?
One call, that is Mindtree. Small correction has been witnessed in it. So somewhere around 882, the stock has been quoting, keeping a stop loss of 898. One can go on a sell side for the target of 860.
Okay, Amar Singh, what about you?
I would say Ujjivan Finance is one stock one can definitely look at because technically it's very strong, and today's also the stock has moved up. So any pullback towards 382, 383 levels can be used as a buying opportunity. The upside target is 398 with a stop loss of 372.
Even I believe is also at 52-week high today. It's seen good gains. Even on the future side, I guess there are some positions being built up on the long side. 385 for Ujjivan Financial. But what's holding ground since morning is Kotak Mahindra Bank, clearly providing support to Nifty Bank and also Nifty as well. Deepak, your thoughts on the development peace deal being struck between the promoters of the bank and also the regulator? They've withdrawn their case now. In principle, approval has been given by RBI. They have 6 months time now to bring down the shareholding by 4%. Do you think it's a win-win for both? I think we've got Tech Mahindra's number. Deepak, sorry, we'll just address the numbers first. The profits there flashing on the screen at 1150 versus 1005. I think the numbers will be compared on a sequential basis. Some minor uptick coming in after the numbers are being flashed, so 0.5% gain. Agam's estimate was somewhere about 1,005 crores, so it's above estimates, Neeraj.
Yeah, above estimates. So 1,005 was the net profit estimate. We made revenue numbers too. And the revenue estimates were about 9,447 crores versus about 8,918 crores. The revenue numbers will come up on your screen a minute from now as well, and EBIT margins were seen at about 12.5% versus about 12.2%, so waiting for that. I think the revenue is 9,650 crores versus 9,447. 9,650 is actually a good number, I mean, versus 9,447 and estimated. So I think the numbers look okay. No wonder that the stock is reacting slightly. Because both on the bottom line and the revenue front, predominantly, I think the numbers look okay. Keep in mind that if it's 9,560 crores or 9,650 crores actually, then that's a beat, that's a revenue growth of northwards of 7.5%, which dollar revenue 5.1% higher, that's the number, but the rupee revenue would be northwards of 7.5%, which is pretty stunning really for a large cap tech company. So this should augur well for the Tech Mahindra stock, but we'll wait for the internals to come in. Deepak, I know we're talking about Kotak, but just making a segue since these numbers came out, just a comment on the revenue growth, not on the stock really. 9,650 crores versus 8,918 crores sequentially. That's strong revenue numbers.
Yeah, I think, I mean, I haven't seen the numbers, so I don't know why this is happening, but yeah, it looks good. December doesn't seem to be usually a very big jump for the company, so this must be something more deeply embedded somewhere. Remember, they have a big exposure to Brexit, so that has been one of the factors that's been weighing down on the stock, but I don't have a handle on the actual numbers, so can't comment on why. Looks good in picture, but obviously the story will come in later.
Yeah, well, so we've got, I think, Amit Chandra, our research analyst at HDFC Securities, on the line with us. Amit, good having you. Thanks much for joining in. Just a brief comment on this. This is what, an 8.2% sequential growth on revenues. What's caused this, and is this a good number according to you?
Yeah, obviously the number is pretty impressive, and seeing the numbers, I think that there has been robust growth both in telecom and enterprise. So we are expecting around 3.5% growth in the telecom piece because of the AT&T deal ramp up. But I think the contribution from AT&T is higher than what we anticipated, and also in the enterprise segment they indicated that there is a recovery in the manufacturing piece and the exposure to auto. The impact that they had last quarter, so they had very robust deal wins. So that also might have contributed to the growth. So I'm pretty excited to see the healthy growth for Tech Mahindra. And also on the margins front, I think the performance is better than expected. So they have been able to manage the transition, AT&A transition pretty well.
Okay, some commentary also coming from the management. Mr. C.P. Gurnani, Managing Director and CEO, says this is a quarter of strong growth across our communications and enterprise business. We continue to win marquee deals and are well poised to capitalize on new market opportunities with technology shifts like 5G, which continues to be a key focus area for the company. And talking about the deal, I guess strong quarter 3 new deal wins. It stood at $1.23 billion. Coming here, Amit, with regard to the deal wins, what were you factoring in, and have they been on track with regard to this particular area?
Yeah, so deal wins have improved both in the telecom and the enterprise segment for Tech Mahindra. And last quarter they reported the highest deal wins, and I think the deal wins, is actually continuing to be strong on the enterprise side. And the analyst also, they highlighted that they are winning more transformational deals, and there is also kind of synergies between the telecom and the enterprise piece that they're looking forward to, and there is higher opportunity in terms of cross-sell. So that is actually playing out, I think.
Well, Amit, what would your verdict on the stock be then? I mean, based on the multiples that it trades right now and the revenue numbers, I mean, we still have to hear from the management, but whatever Navneet read out and the numbers that have come in, you think there is scope for the stock to rally more?
Yeah, obviously. So we have a buy rating on the stock, and we upgraded the stock last quarter, and we are pretty much confident that the growth in the enterprise and the telecoms space will continue, and the margin expansion will follow. So we have a buy rating, and with a target price of 850 rupees.
Wow. Okay. Amit, we'll leave it at that. Thanks much for taking the time out and joining us and giving us that perspective. That's really strong showing from Tech Mahindra. Let's see if this rallies more. A quick technical check out here. Amar, would you take a trade on Tech Mahindra? It's been rather volatile the last few days.
Yeah, I would say that Tech Mahindra, looking at the trend definitely continues to be positive, but it seems to be topping out, because if you look at the long-term chart, somewhere it has got very strong resistance coming around 840 odd levels, 840, 850. But yes, there is a potential that the stock could rally towards those levels. And the stock now has got very strong support base somewhere around 770, 780 levels.
Okay. Deepak, Shenoy, before we thank you, but we are very close to market close, so maybe a slightly truncated answer, but view on Kotak Bank?
Like the bank, we own it. Good news from the RBI. They should have done this a long time back. What they were worried about was mainly the voting rights, not the fact that the promoter has to actually cut his stake down. The new rules are much more efficient. I think Kotak, because of the new FPI rules, will see an increase in the MSCI index. So there will be buyers from abroad that will allow them to perhaps reduce promoter stake without actually disturbing the price too much. It's very positive overall for the bank. I think while it does have some challenges going forward, it's a very smartly run bank. Some retail challenges and some corporate challenges currently will hit the books next quarter, but I think long term it's a very, very good story.
We leave it at that, Deepak. Thanks much for taking the time out and being with us today. Viewers, do watch out for Tech Mahindra. I think the commentary from the management and the brokerages later on could well be a trigger for the stock tomorrow morning. But here's what the markets are doing at close. Nifty Bank about 0.5% higher. Nifty and the Sensex slightly lower in trade. And the mid-cap and the small-cap indices should also come up on your screen in just momentarily. Well, today, not quite underperforming the large caps, which is actually a good thing, or maybe doing better than the large caps is what I mean. So the last 2 days indifference being corrected very quickly. For the large cap space, Kotak Bank 3% higher. SBI post results up about 2.5%, though it's been like this for better part of the trading day. Bharti Airtel gains a bit. Titan, Bharti Infra, Hero MotoCorp are the others which have gained. What's not done well? Tata Motors down 5%, ONGC about 4%, Power Grid about 4%, IOC, UPL, BPCL, HCL Technologies too has corrected in the session today. So commodities by and large look weak, and Reliance Industries is down another 2.3%. Something's gone wrong on the optimism around Reliance Industries. But Navneet, what about the broader end of the spectrum?
Well, Neeraj, of course, there were movers in back of earnings, but I guess it's largely a weak closing, I would call it, ahead of that important event lineup for tomorrow, Union Budget. Nifty's breached the key mark of 12,000 and is also closing below that mark. But I'll still start off with a couple of gainers. Ujjivan Financial had a good session, 52-week high coming up for this one. One of our technical analysts also gave a buy call. Crompton Greaves Consumer Electricals, this one came out with its numbers this week, and the numbers were largely good. Commentary also from the management was good, and the stock is closing with gains of 6%. Orient Electric saw some buying interest coming, I believe, in the last half an hour or so, closing off the day's high, but still strong gains in a weak market like today's. And Century Textiles, one of the top performer of the January series, kicked off the February series on a very positive note, 4% gains. NIT Tech bounced back after seeing a bout of profit booking in last two sessions, so this one's also up about 5%. And what a move DMart has had. Live highs, touching live high levels once again today, up about 3.5% to 4%. And Dabur, of course, post the earnings yesterday, had fallen 2 to 2.5%, but this one too bounced back with gains about nearly 4%. On the losing side, result reaction for Bharat Electronics and huge shorting coming on the future side of the stock. It's also closing at day's low with cuts of 10 to 10.5%. FMCG pack remains in focus. Marico down, disappointed on the volume growth, 6% lower here. Colgate down for the second straight session, I guess because the stock had run up too much. The numbers have disappointed the street, so there is some profit booking which is kicking in here. And Motherson Sumi, they announced they've got board approval to demerge their domestic wiring business, but looks like the street was not too happy with it. The stock's closing in the red, I guess, Motherson Sumi, with cuts of about, I believe, 3 to 3.5%. Yep, and MGL, an outperformer of recent past. The city gas distribution companies have been doing well, but today, since the market was weak, all these stocks which have been moving higher in the recent past succumbed to some bit of selling pressure, or call it profit booking in the case of MGL. But not a great close. 12,000 was closely watched out. First support for Nifty. We've taken out that.
Yeah, first day of the new series ahead of the budget. Should be interesting tomorrow, though. Remember, tomorrow is working. Just very quickly, just one point that I want to look at the volume. Frankly, the first day of the new series, have the cash and F&O volumes surge? Well, the cash volumes certainly have. 43,000 crores on the NSE cash. That's large.
Yeah, participation coming back one day before the budget, and anytime turnover goes up on the cash side, that gives you a sense that there is either a lot of buying or selling taking place just one day before the budget. But yes, I think F&O is just in line with what we had anticipated. Volatility pull up the India VIX as well, considering it has been inching higher. It's closing with gains of about nearly 3 to 3.5%. And market breadth, lastly, I just want to highlight that because that's been worsening for last 2 or 3 sessions. And there you go, in the last half an hour or so, the gap also widened. The ratio seems to be just close to 1:2 in favor of the decline. Just get some closing thoughts going from our techies once again. Brijesh, I want to come to you first. What would be the approach? It's an important day. Would you take a position, or would you wait by for some moves to come by? What are the key levels that you will watch out for Nifty or for Bank Nifty?
Generally, the best approach would be to listen to the budget session speaking by the FM. And if you are a die-hard trader and been concerned, then I would be suggesting wait because some important level has been broken, and Nifty has given closing below 12,000 should not have been that, which give an invitation of immediate support of 11,850. So I would be watching that thing very carefully. If that thing also has been gone, then it looked like might be in February or in March, it looked like Nifty is heading for the level of 11,600. So the first important level to watch on a downside would be 11,850, whereas on the higher side has been concerned, Nifty till trades below 12,140 would be in a bear grip. Regarding with the Bank Nifty has been concerned, 31,200 would be the level to watch very keenly. If we are able to surpass this level, then only we can say, okay, the momentum on the higher side would be there. Otherwise, it looked like now it's heading towards the level of 30,100 or say 30,200, and chances are that 30,500 or 30,600 might be broken yesterday or might be in the Monday. So better to watch the speech. Don't trade. Don't be an aggressive trader in it.
Okay, don't be an aggressive trader. And on that note, I want to thank both of you, Amar Singh and Brijesh, for joining us today and taking us through the technical views on markets. Well, on that note, it's a wrap. But don't forget, we are working tomorrow, so do tune in tomorrow to BloombergQuint. It's goodbye from the entire team. Stay tuned. Market Wrap comes up next.
City